Hey, Michael Smith here with the Bluefield Group, and today I'm here with Luis Caicedo with New American Funding. Great guy, great lender, one of our favorites. And today we're going to talk about some really unique financing options that you might not even know exist. So, Luis, one of the things that I really enjoy about working with New American is just the number of products that you guys have access to in your toolbox. All the lenders out there can do FHA, conventional, via USDA, your basic cookie cutter type loans. But you guys have so many different unique and niche products that a lot of people don't even know exist that might be incredibly beneficial, whether it's a lower interest rate or a lower down payment, or people who wouldn't be able to qualify for a traditional loan fit into this box here. And we're able to get them into a home. So, and there's just so many great things, great programs out there that people just don't even know exist. And so I want to talk about that. So, is there anything you want to add about New American in general, or what you guys do differently?
Right, absolutely. So, besides what you mentioned about our niche programs, we also have excellent service. So we have a particular program or process that we do where we close a loan in 2 weeks.
Wow.
Nowadays in the industry, there's an average around 30 to 35 days for closing, and just the fact that we can close a loan within 2 weeks with our jet processing, it makes a big difference in a very competitive market. Besides that particular service, we also can, as you mentioned before, we have so many opportunities with programs and different products, and the fact that our company service the loans that we have, it's an advantage, because as a consumer you want to know where you're going to send your payment to. Right. And a lot of lenders out there, they tend to sell their mortgage as soon as the client closes on the loan. And so the fact that we keep that in-house, it makes a big difference.
Right, okay. Yeah, I've heard of people where, they get a loan and the mortgage gets sold 3 or 4 or 5 times.
Exactly.
So, you've got auto payments set up to go to this certain person, then all of a sudden, now my loan's with Sinlar or whoever the servicer is, right? And you've got to change all of that. And it gets very complicated, very frustrating.
I have seen clients where they were late on their mortgage, and then now they have to wait 12 months to qualify again because they had a mortgage late on their credit report. And that is, I've seen that very often.
And it's because the servicer changed.
Right.
Not because they didn't have the money, but because they sent the payment to the wrong place.
Exactly.
Yeah, wow.
So it's hard. Yeah.
Okay. So today we're talking about 2 very unique types of FHA programs, right?
Right.
So I didn't realize there was more than one FHA loan. So, tell us about that. What do you guys have to offer?
Right. So we have an FHA program that is 100% financing. We have partnered with a government agency that provides that 3.5% down payment. And this is a program that is sensitive to income. So there are kind of 2 components with that program. One is if you are making 100% of the area median income, that grant, that 3.5% is forgivable. If you are in between 100% and 115% of the area median income, then it becomes a repayable grant.
Okay, so let's rewind a second and just make sure we cover that. So the 100% financing, we've got a regular FHA first mortgage, which is 96.5% loan to value. Mm-hmm. Then on top of that, we've got a 3.5% second mortgage, which is your down payment assistance, right? So between the 2 loans, you're covering 100% of the purchase price, not bringing any money to the table other than like closing costs, right?
Perfect.
And so in order to qualify for this, first of all, what's the name of this program?
It's the Chinoa FHA program.
Chinoa.
Yeah. So it's a government agency that they're there to just help families that have that type of need.
So in order to fit into this box, you have to earn 115% of the area median income or less,
right? Which in Greenville is $68,000.
$68,000 a year. Okay. Mm-hmm. So let's say, and you mentioned 100 and 115, right?
Right.
So first of all, you have to make 115% or less to even qualify.
Exactly.
Right. And so if you're between 100% and 115% of the area median income, it's a repayable second mortgage.
It's a repayable second mortgage.
So what does that repayment look like?
It looks like you can either choose to do a 10-year amortization, or you can do a 30-year. So if you choose the 10-year, there is no interest in that in that term of the loan. But if you choose to go with a 30% amortization, it's a 5% interest rate on that second.
Okay, so explain what amortization means.
So it's basically how you decide to pay out the term on the loan. So basically, if you break it down in 10 years, or if you decide to break it down in a 30-year
Okay.
payment. Yeah.
So the 10-year repayback period is 0% interest, right?
Right.
Okay, so you're literally just dividing that loan amount over 10 years,
Over 10 years,
and paying it
exactly.
off.
Exactly.
Or you could choose to pay it off over a longer term, 30 years.
Right.
You've got an interest rate
Of 5%.
5%,
Right.
but that payment's probably still lower, even with the interest, right? Because it's spread out over a longer period of
Exactly.
time. Okay,
Exactly.
that makes sense.
Yeah.
So in order to make that not repayable, you have to do 100% or less, right? And
100%
so
or
what is
less.
that number in Greenville?
68,000 in the zip codes in the Greenville County market. But
Okay.
I mean, it kind of varies. If you kind of go to a spot where that number is probably a little bit higher.
Okay.
And then if you kind of go spread out in South Carolina, that number goes even bigger.
So does it depends on the county that you're living in?
The county.
Or the zip code or something like that?
Yeah,
Right.
it's the county.
county, okay.
It's a pretty different graphical, but I mean, it's like, for example, like Mauldin, Greer, and Greenville is one, and then
Okay.
Anderson is a different. So it's kind of county based, but then they add in a couple other components.
Okay, gotcha. So if you do fall within that lower income bracket, 100% or less, the area median income, you just never make any payments on that second
Right,
loan?
you never do. I mean, that's just kind of like the benefit, and it's kind of like trying to incentivize families to stop renting and become homeowners.
Become homeowners.
Yeah.
That's great. Okay. And so there's another 100% FHA program you wanted to talk about. What does that one look like?
Right. So the other program that we have here, New American Funding, this is for specifically families have been impacted by natural disasters. So the program is just a regular FHA loan, but it is at 100% financing. So
Okay.
the government covers and sponsors your entire mortgage, so you don't have to come up with a down payment.
Okay. So a good example of this would have been, several years ago when Hurricane Katrina came by. Anyone who lost their home and had to relocate to another part of the country, they could have purchased their home with an FHA loan at 100%.
Exactly.
Okay.
Exactly. And then we have families in Puerto Rico that I have actually helped, recently that have suffered different, natural disasters. In
Right.
Puerto Rico, they moved to the U.S. and they now can qualify for an FHA mortgage with 100% financing.
That's great.
Yeah. Market rate, credit scores is very in market, just 580 credit score, and the rates are incredible.
Okay.
100% deal.
That's great. All right, so one of the things I want to mention is, credit score guidelines, interest rates, those things all fluctuate and change all the time. So for any specifics on any of these programs, feel free to reach out to us and we'd love to help you out. We'll connect you with Louise and make sure you get all the details and see if it's a good fit for you. I really hope you guys are enjoying these videos. We're trying to bring valuable educational content to you. If there's a certain topic that you'd really love us to cover, feel free to leave it in the comment section below, and we'd love to work that in. So Louise, I really appreciate you coming out and,
Sure.
and doing this with us.
Thank you.
It's been great to have you.
Thanks for having me.
And absolutely,
Appreciate it.
guys,
Thank you
we'll
so
see you
much.
on the next one.